This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jeffrey Cherry, founding and managing partner at Conscious Venture Partners. The Conscious Venture Fund 2, the fund or CV Fund 2, is an early stage venture capital fund by Conscious Venture Partners. The fund partners with their business accelerator, the Conscious Venture Lab, based in Baltimore, Maryland. The fund is being created to find, train, and invest in diverse entrepreneurs who are working to make cities and urban environments more livable, sustainable, and prosperous. Jeffrey, thank you for joining us.
Oh, thanks for having me. It's nice to be here.
Great. So what was your background before investing in early stage companies? What did you do before this?
Well, I have a long and varied career. Actually, I started as an architect, back in the mid-'80s. And I went to college in Washington, D.C., architectural school at Catholic University. And for lots of different reasons, I started my firm right when I graduated from college, which was a little unique. But for lots of different reasons, over the course of the 20 years I ran that firm, it turned it into more of a management consulting and technology company than the strict architectural firm. Lots of things we saw happening in the marketplace that I won't bore the listeners with right now, but it really sort of influences or speaks to why I got into early stage investing. We just sort of saw the beginning of what we're all now referring to as stakeholder capitalism or conscious capitalism starting to emerge as we were building that business. And I just got really excited about this idea that there was a new narrative being developed in the world about the purpose of business and society. We ended up selling that business in 2006, started a hedge fund and ran that for about 6 years, and then got to the point where I just thought that the best way for us to make this new idea about the purpose of business to be the norm and not the exception to the rule was to build early stage businesses. So I was an operator, a consultant, a public equity investor before starting where I am now.
So what excites you right now?
Well, I think that we're really excited about a few things. One, we have a focus on trying to identify as many minority, female, underrepresented founders as we can. So really excited about some of the ideas we're finding in places where other people aren't looking. That's sort of one of the things that drives us. We're also very excited about this. We continue to see this notion that the purpose of business is not really to focus myopically on shareholders, but rather to create value for all their stakeholders. We're seeing that gain more and more speed, which is, I think, great for us, great for business, and great for society. And I think that one of the other things that we're really excited about right now is that we've started to, in our fund, and particularly here in Baltimore through some organizations I'm working with, one called Upsurge, which has been built to coalesce the innovation ecosystem in Baltimore. We're starting to see the emergence of this idea that we're calling equitech or equity tech, which is any company who's using technology to break down barriers to access. So we've been investing in those ideas for a while, but starting to really see some interesting things happening there.
Great. So you see a lot of startups and a lot of investors out there. What's your advice for people investing in startups in this sector? What do you tell them to do before they write that check?
Well, I think to get to know the founders as best as possible, right? Because in the space where we play, in the pre-seed, seed stage, there's one thing that we know for certain, that over the time that we're dealing with them, their ideas are going to change. It may not change wholesale, but it's going to change somewhat. So we really focus a lot on getting to know founders, getting to know what they're all about, getting to know sort of their hopes and fears and their dreams and how they interact with their co-founders and us. So we really believe in betting on cohesive and coherent teams that want to do big things in the world. So if nothing else, if I had to give one piece of advice, it would be get to know the founders and don't get overly married to any specific idea, but get really excited about what you think are sort of thoughtful founders.
And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
Yeah, well, we tell them a lot of the same things, right? We tell them that the misaligned capital will pull you off the path. The torque steer or misaligned capital will make you do things you might not otherwise want to do. So when I was coming up, and you and I are probably of the same vintage, Paul, when we were coming up, venture capital was a new customer. So we say, get as much traction as you possibly can. And we understand sometimes for underrepresented founders, that's hard. They don't have access to friends and family networks. So we get that. So, but we're focused on build something that customers want, find a way to figure out whether customers really want the thing you're creating, and then be very discerning in terms of who you take capital from, because we think that cultural, emotional worldview alignment is really important.
Let's talk about the state of investing in this space. How do you see the industry evolving?
Yeah, I think that one of the things that we're seeing, and we hope to be sort of leading the charge on this, is that there's a lot of people out there thinking about how do we make this early stage investing industry more based on data and systematized and less on just sort of our gut feelings. So when COVID hit, we teamed with a group out of Annapolis, Maryland called Founder Track. They were building a platform for helping them understand how to invest in early stage businesses. And we've been working with them for about the last year to help them perfect that platform and see if we can systematize this sort of process. So what data can we get back as we continue to invest in new companies and be able to use that data to make better decisions in the long run? And how do we see companies working through, particularly through our accelerator program, and what can we learn from that? So I think that that's a big trend, people trying to figure out how do we do this with more data and more systematic way.
Then over the next 5 years, what do you think is the biggest change you will see in this space?
Wow, that's a great question, Hall. We've been thinking about, if you think about the space or early stage investing is one thing. So we've been thinking, can you apply artificial intelligence to some of that decision making, right? Because right now it's sort of really, it's a very manual process. And so going back to the systematization of the process. So is there a way to apply some of these new technologies that we're seeing to the process? We also think that there's going to be, depending on what happens within the cryptocurrency world and blockchain, there's going to be some developments about how you create contracts, right? And how you create relationships with customers or with startups that we think, I'm not sure, I don't know if I'm smart enough to figure out what those all are going to be yet, but we think that that's coming. And then I think if we're looking at the areas in which we invest in early stage, we're seeing a lot, as we said, about this sort of idea of equitech. We're also seeing a lot of, which is probably not surprising to people in this environment, a lot of ideas around mental health. How do we support each other from that standpoint, and different ways to think about social and emotional health? Lots of things happening there. And then just the whole notion of what's the new normal going to be post-COVID, right? And how do we support each other? Because I think that the summer of COVID and the summer of George Floyd have uncovered lots of flaws in the system that people are trying to figure out how do we solve. So I think that those are some of the mega trends I think that we see.
Let's talk about your investment thesis. What exactly is the thesis, and what's your criteria for looking at startups?
Yeah. So probably covered most of this, but the thesis is really around what we call three legs of the stool. One is that we believe that the winners of the future are going to be those companies that understand creating value for all of their stakeholders is much more powerful than focusing myopically on shareholders. Two, we think that I spent a lot of time on the Rise of the Rest bus with Steve Case and his team and Revolution and those folks. And Steve talks about they're smart, talented, innovative people stretched out, strewn all across society, but opportunity is limited. So we think that that's very similar to where we think about the world. So we try to do a better job of seeking out underrepresented founders and checking our own biases so that we're uncovering ideas where other people aren't seeing them. And I think that the third thing is the third piece of our investment strategy revolves around this idea of, can we find companies that are doing things that make society, particularly living in urban environments, more just, more joyous, more equitable, more sustainable, more prosperous for all. So that ties into this idea of equitech that I mentioned earlier. So companies that are using models, creating new business models and using technology to break down barriers or improve access. And it could be access to anything, access to water, access to technology, access to healthcare, access to getting food deeper into food deserts and cities. So it's a pretty broad mandate.
Great. Can you talk about one or two startups that fit that thesis?
Yeah, I think that our one startup that we invested in about a year and a half ago is a company called R3 Score, which is two African-American women, mother-daughter team from here in Baltimore, that are creating, because of their experience, the mom's experience with the criminal justice system, are creating a better way for banks and hiring managers to understand the risk of working with returning citizens. So where it is right now, you've got a felony, you're trying to get a loan, you're trying to apply for a job, you get asked that question, you say yes, and even if you've got the capability, the person on the other side of the desk doesn't know how to think about that. So what R3 Score has developed is an algorithm that takes all of the data that we use for sentencing and wraps that with context, and to give those specific customers, loan officers and hiring managers, a better way to understand the person sitting on the other side of the table from them and what sort of risks they face. So when you think about that, we're trying to break down barriers to access to new jobs, to new opportunities, by giving those customers a better way to think about this huge cohort of people in the United States who have a criminal record. 1 in 3 Americans that right now has some sort of criminal record, which is pretty astounding. So that's sort of one of the companies that we really love and is doing great things here in Baltimore. Probably our most successful company is a company called Hungry Harvest, which is a food delivery company, a produce delivery company that was trying to solve hunger all over America by tapping into this notion that there are 6 billion, I think is the number, pounds of produce that goes to waste every year for either supply chain inefficiencies or aesthetic reasons. So they try to use one problem to solve the other. So it's a tech-enabled sort of community supported agriculture, CSA. And we can buy, boxes from them. So they're recovering food, and they work with local nonprofits and different programs they've created to help get more food deep into food deserts and cities. So it's a really interesting model. They have very high margins. They've grown fantastically. They were growing great before COVID, and obviously with people staying at home and doing more cooking and ordering in, they've had a tremendous growth spike. So those are two sort of companies that we think about that sort of really fit the mode of our investment thesis.
Great. We see a lot of startups and a lot of investors. What is the main challenge you see startups facing in your sector these days?
Yeah, we've been seeing a lot of interesting challenges. I think that we're seeing this sort of East Coast, West Coast divide, if you will, from a valuation standpoint. So we think that is something that people are trying to figure their way through. We see that both investors and entrepreneurs are struggling to figure out the best models for support beyond money. So value-added support, that money isn't really the only thing that matters, that how you support entrepreneurs and doing things that are best in class and not trying to do everything. So we see both entrepreneurs and venture funds sort of struggling with those issues. And then obviously we see that underrepresented founders and getting access to capital is one of our main themes, right? So that continues to be a problem, even with a greater focus on it after George Floyd's untimely death this summer, and lots of attention that's been put on how economic inclusion impacts the relationships that society has with minority communities. Still an uphill battle for underrepresented founders and finding capital. And that makes its way all the way down to us as a minority fund manager, getting LPs to understand that the best way to get capital to minority founders is to support minority fund managers. It's still a challenge, shall I say.
Great. Then on the other side of the table, what's the challenge you see your investors face these days?
Yeah, I think so. I think that trying to separate, we used to call in our hedge fund days the pretenders from the contenders, right? There's a lot of funds that have popped up since the summer and trying to capitalize on the moment. And that's fine. We don't take exception to that. But there are firms that have been around like us since, we've been doing this for, it's going on 8 years, and I've been investing since the mid 2000s. And then there are some people that are coming to this pretty new. And so I think that LPs are working hard to figure out how to think about that in the marketplace.
Great. Well, you see a lot of different sectors and applications out there. If you had to pick one or two that you'd put at the top of the list for investors to pursue, what would you call out?
Wow, that's a great question, because we've got a pretty broad lens. And we think that this whole idea of access, which is what we're trying to do as a fund and what we're trying to invest in, is pretty interesting to us, right? And I guess if we had to think through it a little bit, it might, start with just access. How do we create more access to opportunity, or more broad access to opportunity? And can we think differently about, one, the way we practice business to provide more access to opportunity, but also about the businesses that we invest in, right? We think that there are a lot of ideas, because of unconscious bias, that are going unfunded, that could provide a tremendous value, not only to underrepresented community, but to society at large. So it's not your typical answer, Hall. It's not your typical sort of this sector or that sector. I think it's more of a cultural, a social phenomenon that we're looking at. But we find that when you find those companies that are thinking that way and solving those problems, solving for some of that problem, they end up being wildly successful. So we're encouraged by that.
That's great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
Well, this has been pretty thorough. You're a pretty thorough interviewer. I've been well prepared, so I appreciate that. I think that for us, the most important thing is we want investors, particularly LPs, corporate VCs, other sort of large venture capital companies, to start to think more creatively about how they support underrepresented communities and underrepresented founders and fund managers like myself, who, not for a lack of experience, are finding it more difficult than perhaps it ought to be to raise capital. So we're always, I have a standing call with a couple of, sort of major Silicon Valley venture funds every quarter, just to sort of discuss this. And, there's no expectation of, we're doing anything together or any investments, but just to so we're having the conversation about what's going on in the marketplace. So we'd welcome those sorts of conversations with anyone who's found listening to you.
Great. Well, how best for listeners to get back in touch with you?
Oh, we're very open to email correspondence. So anyone could reach me at jcherry@cvpartners.vc. I think you have that email, but anyone, I'm happy to engage, and I probably do more Zoom calls than I ought to, but we're happy to have folks reach out to us in that way.
We'll include those in the show notes. I want to thank you for joining us today, and hope to have you back for a follow-up soon.
Yeah, well, thanks for having me. We appreciate you doing good work.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only
and should not be relied upon for the basis of investment decisions.